Cloud. All right, welcome back to the Real Estate Locker Room Show, folks. I'm your host, John Carney, and thank you for taking the time out of your busy day to once again tune into the Real Estate Locker Room Show. I'm truly grateful for all you return listeners out there. It really is your support that what drives me and keeps me coming back, and we've got a great show lined up for you today. I know your time's valuable, and I am really honored that you're spending some of it here on the Real Estate Locker Room Show. And if this is your first time, welcome to the show. The goal here is to deliver you actionable advice, stuff that you're going to pick out of my conversation today with Keir that'll help you elevate your real estate investing game today. I know that's going to happen. To continue to raise the bar in your specific area of expertise, whether you're an industry professional, like an accountant or a lawyer or a title agent, or whether you're an investor or you're thinking about getting in the game. Welcome to the show that believes real estate is a team sport. Today, we're up to episode number 83, and I'd like to welcome my guest today, Keir Weimer. How you doing today, Keir?
I'm great, John. Thank you so much for having me. I'm excited for the show.
Awesome. Yeah, well, I mean, we try to pack a lot of great inspirational content here in 30 minutes. And, it's time to charge into the world of being a real estate entrepreneur. So I like to stretch out, if you don't mind, just for a few minutes, get the conversation going. And we're in the Real Estate Locker Room Show to explore the intersection of competitive real estate or entrepreneurship. And then, what I draw my inspiration from athletes. Right. Yep. And so, do you have an athlete in mind or a sport that you played growing up that inspired you?
Yeah. So favorite athlete's tough, but I always grew up with Syracuse basketball. So I grew up in a small town in central New York, very much into collegiate basketball. Went to games with my father, trudged through the snow. Ended up going to Syracuse, was a 3-sport varsity athlete in high school, but I wasn't good enough to play D1 for Jim Boeheim. So my collegiate sports in terms of club and team didn't really happen. I started to segue away from that into more individual sports. But I'd say favorite athletes growing up would be Donovan McNabb, who's a football player for Syracuse, later the Philadelphia Eagles. Carmelo Anthony, who was there leading our basketball team in 2003 when I was a student at SU, when we won the national championship with him and Jerry McNamara. And obviously the great Michael Jordan, who pioneered a new level of dominance in any one team sport with what he did with the Bulls. So those are probably, leaders as athletes that I've looked up to growing up.
Yeah, great. I mean, like MJ mentioned a lot, especially I'm a little bit older but an iconic player. He had I had the privilege to see him play against the Cavaliers back, right in the same season as the famous shot. And, moved back to Cleveland in 2016 and was honored to see LeBron James play as well. So, I mean,
that's amazing.
The one thing about basketball, I like going to see it live, but man, if you want to see something funny, hand me a basketball.
Yeah.
Incredibly awkward.
That's funny.
Well, okay. So you've got a great story to share. You're incredibly successful. You've launched multiple 7-figure businesses in multi-sectors of the real estate industry. Do you want to just kind of give us a brief segue into how your real estate entrepreneur's journey started and what's exciting that you're working on right now?
Sure, John. Yeah. So let's rewind to the summer of 2012. I was sitting up in the mountains, kind of where I am now, of upstate New York, a place called the Adirondack Park. I was reading the last of 7 denial letters to graduate school. I'd applied to business and law programs for a JD MBA, thinking I was going to go down a new path and climb the corporate ladder on Wall Street. I was 29, turning 30 years old. And I had received the last of, again, 7 rejection letters telling me that no, I couldn't do what I thought I'd wanted to do and planned to do as I started to enter the working world. Now, you may ask, why was I 29, 30 entering the working world? Without going into a terrible amount of detail, given the time constraints we have, I was responsible for an alcohol-related boat accident, John, in the senior year of my college experience at Syracuse University. And it ended up claiming the life of my friend. And as a result, I was charged with vehicular manslaughter and ended up serving some time, 3.5 years to be honest, in New York State prison. And most of my 20s were either preparing to go into that, going through the court system, going through it, learning how to live, survive, and create a new way of living, or trying to reintegrate afterwards. When I was launched back into society at 28, almost 29, no job, living at home, curfew, parole, no car, no money, no prospects, and now 7 denial letters from what I thought was going to be my path and my way to reintegrate and show the world that I was somebody else, that I was, with a bigger vision for my life. It was a tough pill to swallow after a number of different walls and hurdles leading up to that. But what I did was I gained perspective through what I had been through and what I had to adapt to in terms of the emotions surrounding what happened, taking responsibility for what had happened, and trying to create a new life, one based in purpose and contribution and doing the right thing. So for me, when I did get perspective and realize that, you know what, the only way forward for me now is to be an entrepreneur and to be so in every sense of the word, right? Mindset, how I think, action, how I behave, right? And how I craft a life where I'm in the driver's seat, right? By design, putting myself around people and opportunities that really align with my values and my vision for life. So at that moment, I decided I needed to be an entrepreneur, right? So what did I do? I thought about what am I good at and what do I have an interest in? I knew that I was good in business, even though I had no experience in the working world in business, but I went to school for finance and economics. So I had some training and some internships. So I knew that that was there, right? It's foundational skill. And then I knew that I had an interest in real estate. I always had. I always thought it was a great, reliable, relatively risk-adjusted way to build wealth and income in life. So I said, all right, well, we're going to find a way to create a career where those two blend, right? My somewhat base skills and my interest level. And I said, all right, well, where do you start in real estate? There's a number of ways to enter the business, as you and your audience knows. For me, I thought it would be wise to be an agent first, to get licensed, to go through morning contracts from the ground up, right? Understanding property, people, relationships, and to build some income. And so I got licensed and I started a real estate practice, and I encountered another wall, which was this: 1 year in, 12 months, $40,000 in debt in advertising, marketing, and training, 0 homes sold, no income, family pressuring me. You got to get a real job. You got to make this work. What's going on? But I did one thing right. I learned how to list luxury properties, which is a key skill in being an agent. And that propelled the rest of my career, meaning the second year in month 13, first one sold, next one. And all of a sudden I was #1 agent out of about 75 agents in my company and in about 30 counties in my, 2.5 years into the industry and the business. So it was a rapid rise. And then from the brokerage standpoint, it gave me income, confidence, and freedom to do other things and to start to branch out. So that's where, as you know, I've done some other things in the business, from hospitality development. I bought a resort that I was the listing agent on that we couldn't find a buyer for, that my client was facing foreclosure. So we provided a way out. Bought that with 2 partners that moved up there. We've renovated everything, 30-room boutique lakeside resort with 2 restaurants. We just won a bunch of awards for best hotel and resort in the region. I'm under contract for another hotel right now. So I'm building a portfolio of small hospitality multifamily properties on the side. And then I decided to go back to school or try to, right after that first round was unsuccessful. And that second round was successful, which again told me that when you put your mind to something, right, you have a vision, you create a roadmap, some great things can happen if you're patient and you do the right thing. So I actually ended up getting admitted into New York University, NYU Scheck Institute of Real Estate, which is one of the world's most premier, if not the premier, real estate program for master's education level training. I went there for a master's in finance and investment in real estate. And I actually graduated in a month. Surprisingly, a 2-year degree took 4 years, but you know how we get busy in this business. And that led to so many other things. And that led to, multifamily investing, which I'm sure we're going to talk about. I had a vice president of acquisitions at a company called Odessa Realty Investments out of Manhattan. We own about 2,000 apartments around the U.S. and putting together a strategy to launch a hospitality ground up division next year in 2020. And it led to some other things too, which I'm sure we'll touch on too, in terms of a multimedia company that I started a year ago. So my thing to sum up that I'm most excited about now, John, is taking what I've learned in the last 5 to 6 years in this business as a practitioner in development, investment, and brokerage, and helping empower other people to do the same thing, to build income, wealth, and freedom in their life through this great business of real estate in any of the many ways and areas you can do it. And we're doing that through our coaching program, our online course, through books, podcasts, and a mastermind event. So that's probably what I'm most fired up about now.
That's awesome. Well, first of all, thanks for sharing the story, and the look back is, it's a bit of a heavy story, right? And that the audience knows that, but you were able to tap into something different, right? And one the mindset of not giving up and not quitting, or for lack of a better term, grit, right? I don't know if anyone said, "Hey, you got grit," but whatever it is, I mean, to me, that's the compelling, that's compelling, and having those rejection letters and then going into debt, following your path that you were confident was going to be successful. So, if we're going to share some action items with based on that experience, looking back to the time where you had to make some tough choices, right? That's what defines us, the making the decision and sticking with it, not always chasing the shiny objects. How did you, did you have a mentor? Did you have you mentioned your family might've been not ultimately supportive after 11 months ticked over on the calendar with no sales, but like, were you meeting people? Did you have another circle that was supporting you and keeping you on track?
Yeah, great question. So my family, always growing up through the accident and the aftermath, and when I was away, were extremely supportive, John, to the point where I didn't even feel like I deserved it for many years, given what happened. They were also supportive when I got out, obviously, and throughout that entire difficult experience. I wouldn't say they were unsupportive when I got to that 12th month, but they were just like, hey, like,
concerned. They were concerned.
Yeah, they were like, hey,
that's a better way to frame it.
Like, hey, do you think this is going to work? Like, this is commission income. You got bills. Like, we've given you a loan. I got credit card debt, this and that. And I just never gave up on my vision. When I put my mind to something, I commit relentlessly to my vision, and I persevere until I reach it and achieve it. And for me, I knew it was close, right? Most people kind of give up on that 5-yard line, 10-yard line. And I knew I was close. So I said, I've come too far. I'm not walking away. I've learned one key skill, and I've listed, $30 million in luxury inventory. At some point, this has to sell, right? And it did. And that formed the foundation, which propelled and skyrocketed over the second year everything else, right? The brand, the reputation, the income, and the opportunities to do other things. So I think the tidbit there, or the takeaway, is in order to be successful, you need to develop a willingness and ability to persevere through the walls, the setbacks, right? To develop that thing we call grit that's hard to define. You need to commit relentlessly to your vision, whatever that vision is. You need to write it out. You need to make sure it's a part of your daily routine. You need to see it. You need to affirm it. You need to reaffirm it. You need to have others hold you accountable to it. And you need to be willing to, pull your sleeves up when it gets tough and not give up on yourself, right? I never gave up on myself and my vision. And as a result, we were able to finally break through, right? That Sheehan's wall. It takes a while to just break through, but once you break through, you start to really cut an edge in a space in the market. And that's what we did.
It's a great story. So you've done a lot of, you started on the sales side, right? How important is it to learn how to sell something in general?
I think it's critical. I mean, John, you have experience in this. You're licensed too, and you do a lot on the investment side. Most investors don't have a license, don't think there's a need for it. And frankly, as an investor, in most cases, there isn't. However, the people that are investors and developers with a sales background, experience, and or a license, I think have a leg up. They understand things, and they understand certain perspectives and nuances that others don't, right? They understand how to deal with people and negotiate sometimes a little bit better. They understand the nuance around contract, right? And all the other things that are attended to a transaction and managing it. And they understand persuasion, how to get two parties, right, together to agree. And that, I think, is a really important skill with whatever you're doing. And as an agent, it's foundational.
Yeah, I agree. So in the space you're in now, right, you've mentioned, can I just say repositioning a commercial asset? Like, I mean, a boutique hotel, however many, rooms or square foot fall into that, definition, or any other distressed commercial asset. I mean, Um, did you go? You went from sales into that, and what was that experience like, and what did you learn by all of a sudden having the responsibility of turning this around, and how did you map out that repositioning?
Yeah, great question. That was a bear. That was a big project, man. I got to say, my partners and I had zero experience in project management, hospitality, or restaurants. Zero. And we took on this multi-million-dollar project, bid it off, falling in the ground, total gut renovation job, was, negative brand equity in the market, all kinds of liens, facing just massive issues. And we took this on because we saw a need in the market. We saw a void that was being unmet, and nobody was addressing it. And we had a vision, right? This idea, that field of dreams analogy, if you build it, they will come. Luckily, we built it and they came, but it's not been without challenges. We're still in a seasonal market, right? We're in a vacation resort destination area. There's cyclicality and seasonality, all that. But the nice thing is we learned by being in the trenches of real estate, literally managing a project with 3 crews, 25 contractors over 8 months, round the clock, 6-7 days a week, while the property's closed, trying to meet a deadline of being open by 4th of July. And we somehow got this thing open, turned the ship around, and opened up to this massive fanfare and all these people on 4th of July 2016. And it's been gangbusters since. We won #1 best hotel and resort, like I mentioned, and runner-up for 2 restaurants out of over 250 properties and about 6 million acres. And this is 3 kids, with zero experience. So the moral of that story is, don't be intimidated by big challenges. Don't, not try something because you don't have experience, meaning we put ourselves around consultants, experts, and people that did, right? So we could hedge and mitigate some of that risk, and go after your dreams, build a vision, and then build a strategy that supports it, and take a calculated risk. It's the only way you're going to get ahead, and for us, that was exciting.
Yeah, big thinking. Well, all right. So what's the name of this resort? We want it in the show notes. If
Sure.
anyone's listening to this or watching it on YouTube, I'm sure they're,
Yeah.
please promote it, because
I appreciate it.
what's the name of the resort?
So it's called Great Pines, GreatPines, greatpines.com. You can check it out, guys. There's several videos on our turnaround, the transformation. For anybody interested in development, redevelopment, repositioning, or hospitality, it's definitely worth taking a peek. And it's, we do all kinds of retreats. We host mastermind events there. We do weddings, business retreats, again, fine dining, casual dining, 2 distinct restaurants, 30 rooms, and it's right on the most popular lake in that region in upstate New York.
That's really cool. I mean, so the transformation of real estate. Are there any? So we've got the we'll call it boutique resort.
Yep.
And any other experiences in taking an underperforming asset and reapplying what you learned there in a different lane?
Yeah. So in your lane too, in multifamily and apartments, what we do at Odessa Realty Investments out of New York with another takeaway here is, go back to school, be around good people, and see where the opportunities take you. One of my first professors at the NYU program is my mentor, great friend, and business partner and colleague at Odessa. So I started with him as an intern, then analyst, associate vice president. I've just moved my way up through working with him on several different deals. Now we've done 6 deals, over the last 4 years or so for just over 2,000 apartments, buying large scale apartment complexes. These are workforce housing value add deals, anywhere from 250 to 550 apartments. So they're big deals, 30 or 40 million to as much as 70 million total capitalizations. And these are big, heavy lifts. These are value add vintage properties that need, unit renovations, clubhouse, maybe re-tenanting, repositioning, and the marketing and the competitive, positioning against other properties in the area. So these are not, properties without big challenges and big lists. But as you and I know, some of the biggest returns and the biggest satisfaction come from these very opportunities, right? And the opportunities that some investors and developers and shops don't want to take on because of the amount of work that goes into it. So a lot of the deals we've done, almost all of them, are what we call consolidation deals too. So these are fragmented ownership, broken HOAs, old condo deals gone multifamily rental, and they're owned by mom and pops or proprietors or small investors, but they're not institutionalized. So we kind of consolidate, make them under one ownership, close on them, do the work, re-tenant, raise the rent roll and the NOI. It's usually a 3 or 4 year hold. And then, sell the asset and generally experience returns on average anywhere from 17% to 24% IRR year over year. So really good annual returns for, value add multifamily right now.
Does Odessa act as a general partner? Like okay, I got you.
Exactly right. We're a GP operator, partner. We partner with limited partners, LPs for most of the equity, but we source the deals. They've all been off market, which is a great value too, that not having a publicly shopped deal that's bid up on pricing. And, we underwrite the deal, we asset manage it or co-asset manage it, implement the business plan, and execute a sale. So yeah, we're very much general partners. Yep.
Well, we can talk about, let's kind of jump on the multifamily. It's
Sure.
Maybe it's because I'm in that industry, but a lot of guests, it's something that's brought up a lot through general partners, syndicators. It's a great asset class. And
Yep, it is.
I love it. I don't necessarily love all the paperwork that comes along with refinancing it, but
Yeah.
that's because I'm swimming in it at the moment. But
Yeah.
if you're listening, and there's paperwork involved in fees. But at the end of the day, we were talking earlier about your outlook for real estate in 2020, and maybe you have some metrics where you could take the audience farther. We had a gentleman on our show, multifamily expert, says we are in a mega cycle that is going to outlive us. What are your thoughts on the multifamily asset class, and either learning how to become a general partner, working for a general partner, or investing as a passive investor?
Yeah.
I'm always looking for
Yeah.
more information from around the country.
Yeah, no, great question. What we're seeing, and I think a lot of investors in the multifamily space are seeing, is a little bit of trepidation, a little bit of oversupply and inventory in some markets, but rates and debt remain really attractive, right? Especially the agency debt that you can get on a long-term fixed basis to really make these deals attractive, especially in this environment with cap rates being compressed to where they are in many markets. Sometimes multifamily assets are trading in the low fives, sometimes even in the fours in urban markets, which is crazy low, right? So, to do that, you need obviously very attractive and affordable debt. On the new development side, we don't really play in that space. We're thinking about, like I mentioned, getting into it on the hospitality side with building some select and focused service hotels, maybe Hilton branded. That would be something that we can leverage some of my experience, some of our experience in the capital markets with our colleagues and our partners, and do some exciting things. But it's tough because we're very much in the late stage of the cycle, and people are all over the aisle in terms of prognosis and forecast, right? Where are we going to be? What 2020 is going to do? I think for me, a lot of the risks is what happens in election in 2020 in a year, and a lot of people are wondering what happens depending on who's in the Oval Office. And I think that's a big factor because it dictates fiscal policy, where the tax rates are going to be, what some of the regulation levels are going to be. And without getting into a political discussion, those policies directly affect the attractiveness of real estate as an investment, the passive income tax rules and laws, what happened in 2017 and with opportunity zones in that 2017 Tax Act, and all those implications surrounding that, I think right now are still not fully felt and understood. So where we are is cautiously optimistic that, yes, to your point, the cycle will continue in a bullish way, but we definitely see signs of softening, trepidation, and a little bit of on the sidelines just to see how things kind of shake out into the early part of next year. And then the big thing is what happens in November 2020.
Yeah, I mean, there's definitely, we've seen, we're not, our company's not a big company, and so that affords us some type of speed at reacting to our particular markets. But the founders are also very cautious, and I love the what's that, staying power. You got to have staying power, right? But Our business model is buy and hold,
Mhm.
forever, right?
Yeah.
But buy and hold for a long time, and develop and hold and manage. And what we're seeing is we spent a lot of time looking at we've got our pipelines full for us right now,
That's
with
great.
new projects. But in order to get there, you have to spend a lot of time vetting what's on in the market. And what we saw was institutional money coming in and paying amounts that weren't even imaginable for us, right?
Yeah.
So, I think to myself, are these going to come back?
Yeah.
It almost doesn't matter. Some deals get horse traded, right in the city center, right here in the CBD. It's happening in Midwest markets, but
Yep.
that's like the big leagues. Most the audience for this show may want to be there someday, but let's talk about some things that help people get into the game,
Sure.
whether you want to get into the luxury real estate listing game,
Yep.
or whether or not you want to get into some type of passive. And by passive, I mean you're out there vetting the people you're handing your money over to and trusting
Yep.
their experience and their good choices over time to return your money to you with a return, right? So I mean, what's some advice you have for people that want to get going?
Yeah. Great question. Best advice at a macro level, generally speaking, on getting into real estate to build income, passive income, and wealth would be to chart out a vision, right? What is your vision? What's your why for this? Meaning, what are the reasons why you want to enter it? Who are you trying to provide for it? Is it legacy? Is it family? Is it new opportunities, freedom, travel? What is it? What is your skill set? What skills and time and resources are you bringing to the table, right? So if you don't have the real estate skill and you don't have the time to invest to develop the real estate skill and knowledge, you probably shouldn't be an active investor or developer, right? You're probably going to want to find some people with the expertise that are trustworthy, that are doing this with reliable results, where you can entrust your money, right, to your point, in a passive sense and make a return. If you want to get more actively involved, either part-time to start, eventually maybe as a full-time career as an investor, developer, or agent, a couple tips and takeaways. One is, I'm a firm believer in compressing time. By doing that, I mean working with mentors and paid mentors in groups we call masterminds, which is where you're putting yourself around other people who are further along than you, who have accomplished the things you want to accomplish, that are more successful than you, so that you're not the smartest and the richest person in the room, right? I'm a firm believer in that. I'm a member of several of these. I get a lot of value from them in terms of expanding my mind, my thought process, my access to capital, deals, investments, all of that. So I think that's really big, is being willing to invest in yourself and in your growth and knowledge and network, because that compresses time, right? Like, why take 5 or 6 years to learn something that you could possibly learn in a month, being in the right rooms with the right people? And it also hedges against the risk of trial and error, making a bad investment decision and getting burned, because that happens all the time, right? So that's big.
Yeah, I mean, I suppose you want to risk what you can lose, but it is always better to find the people that are doing it and be patient, right?
Totally.
And in my I don't know, maybe I'm in my I will officially be in my mid 40s in the next 6 months, but I feel that I'm getting there to the patience level. It depends on who you're talking to, but
Yeah.
it's sort of time under load, right? I've been fortunate. I've been fortunate enough to be around this industry. Unfortunately for me, I thought I could do things in my 20s that I really couldn't, and that was the learning curve and the pain,
Yeah.
right? So back to the premise of the show, right? Let's help everybody else learn from our mistakes. What would be some, not a mistake you learn from, but like a close call? Do you have a close call that you were sweating that turned out to be a good deal at the end that you want to share with the audience? I don't know if I framed that right. I don't ask that question all the time.
No, I know what you're saying. I haven't had any bad deals, or deals have gone like off the rails or gone south. Knock on wood. You're gonna have some. I mean, here's the thing: you can't win them all, right? You can't call them right all the time. So I think you have to be ready for that. And to your point, you don't want to over leverage with debt or over commit with time, and you want to protect the downside always, right? And the money of your investors, and you want to only invest or put on the line what you can technically afford to lose, right? So I think that's important, like being somewhat conservative and fiscally responsible, but also being willing to take some calculated risks, and believe in yourself, your knowledge, and the people that you're around. I think it's important. For us, we had to do that to make this work at Great Pines. And, you know, you have to do that at certain times in your career. And again, you're not going to win them all. And it's earlier to aim small, miss small in the beginning, build some experience and some small wins, and then maybe go for a double or a triple, but not put everything on the line, hoping you're going to hit one that's a grand slam right out of the gate.
I like it. It's good advice. You know, I've only been on the Zoom now. Maybe you're like the 5th or 6th podcast. I can't remember, but
Yeah.
It's different when you can see the emotion. I don't know. You're a media guy, so
Yeah.
I just caught up to 2019 right in time for 2020.
Yeah.
But you spelled it out in a great way, and you know now people can rewind and watch that.
Yep.
It's I agree. Focus on getting on base and
Totally.
keep going. All right. Well, there's a few sort of closeout questions that
Sure.
I like. We're building a reading list. Are you a reader? Is there a book that you recommend that people pick up, or a podcast or a YouTube channel someone should be watching?
Yeah, great question. I'm a big reader. I read about 2 books a month. So I'm on pace this year to do 24. I also listen to a number of podcasts, and it's a lot. And I do them between Audible when I'm in the car working out, or on a plane, or on my Kindle. I listen to a lot of podcasts. Let me start with the book recommendations. The 2 books that were really critical for me from a finance and mindset standpoint would be, one, for the mindset, is Think and Grow Rich. You probably heard of some of your audiences. It's just a kind of a pioneering classic from Napoleon Hill, released in the 30s around the Great Depression, that is amazing for how you look at life, the law of attraction, putting yourself around people, and really finding success and happiness. So strongly recommend you read that if you're interested at all in personal and professional development. Number 2 is a work by a famous author who most of your audience has also probably heard of, Robert Kiyosaki, Rich Dad, Poor Dad, who has got, and by the way, this is a super successful real estate investor in his own right. He's got a portfolio worth several $100 million right now, all mostly multifamily, but he's got a really great media company, which is what he's known for, right? Books, podcasts, events, training, seminars. His book, The Cash Flow Quadrant, Robert Kiyosaki, Cash Flow Quadrant, is awesome. Get it, read it, study it, understand those different 4 quadrants, which is employee, self-employed, business owner, and investor. In that progression, you want to be working in your career, doing things to get to that last quadrant as investor. And you can only do that when you've gone through the other 3.
Yeah, I agree. And that's, that hasn't come up. The first book, right? Rich Dad, Poor Dad comes up all the time. I'd be surprised if anyone who's made it to your level of success doesn't have an old copy on their shelf somewhere.
Yeah.
And mine's followed me all over the world, literally. I've read it multiple times because it inspired me. That's great. The Cash Flow Quadrant hasn't come up before. So
Good.
Robert Kiyosaki's other famous book.
Yeah, he's got about 5 or 6, but this is the other one. It's right, not the most famous.
It's almost equally as famous.
Yeah.
All right. Well, look, is there? You've given a lot of advice. So, one pro tip, soundbite that you could give to the audience who's someone who's struggling, needs that mindset shot in the arm right now.
Sure. It's going to be a famous quote from my father. So maybe not famous, but famous to me, who's my best friend and mentor, and somebody I love dearly, who I lost a few years ago, who told me in the darkest hours of my life, don't count time, make time count. And for me, that was so powerful and salient. And what it did is it helped energize and inspire and turn my life around, so that I utilized every minute awakened in this world to grow, to learn, to develop, and to contribute, so that I could be the best version of myself. So right now, the best thing you can do is not count time until that first investment deal, until you're successful, until you're retired, where you can do this and this, but make the time you have now count. Embrace the process and the journey. Don't be hyper-focused on the destination. Put yourself around great ideas, people, and resources, and go after your dreams and your vision with an unrelenting commitment, and be unapologetic, and persevere through the obstacles, the walls, the setbacks, and never give up on yourself. That's my advice.
I love it. We want to reference that quote properly. What was your father's name?
So my father's name was Mark, M-A-R-K, Weimer, W-E-I-M-E-R. And that quote was very simple but so powerful, which was, don't count time, make time count.
I love it. Sorry. Got to make a note on my notes.
Yeah, it was so powerful for me, and it still is today.
Awesome. All right. And then, before we say goodbye, do you have a practice or ritual or something that helps you kind of stay focused and get in the flow state with keeping your goals in the front sight focus? And, we're always looking for that self-improvement advice that we can try and incorporate in our own language.
Sure. I could say all the regular things like meditation, my morning routine, evening routine, that's all important. But what I will say is this: spend time and schedule time to be creative, right? To work on yourself, your vision, your creative outlets. I go on personal retreats 1 to 2 days at least every quarter, but sometimes every 2 months. And I'll literally just go away for 1 to 2 nights, and I'll work on like my most exciting, creative, important project. And that's all I'll do. I'll turn off from the day to day and I'll work on that. Make sure you schedule in vacation time and personal creative time before anything else, so it doesn't get traded away and sacrificed, because that is where you're going to get into your flow state and create what Brendan Burchard, who's a coach and somebody I follow closely, calls PQO, which is prolific quality output. That's when you can really create some of your best work, is when you're focused, flow state, alone, and not distracted by all the things of your day-to-day life, work, and all the million notifications out there.
I'm glad you brought that up. Our team, nothing makes me smile more than when they decide to check out and take their full, time off. And we're always liberal, because I get it. You can't. I don't know. We're not in the 50s anymore.
Yeah.
And we want people to be happy and creative, right? I mean,
yeah.
Creative, innovative, right? Same thing in my mind to a degree. And to get that innovation out of our A players requires them to check out. That's kind of a different culture mindset maybe, but for everyone out there, schedule your vacation. It's super important. And you always come back, feel refreshed. Stick your feet in an ocean or on the earth somewhere, please. All right.
I love it, John.
All right. Well, thanks for joining me in the locker room today, Keir. Where can the audience find you to carry on the conversation if they want to learn more about what it is that you're doing, your masterminds, and, absorb some of your knowledge?
Yeah, the best place to go would be my website, which is keirweimer.com, spelled KEIRWEIMER.com. And you can learn more about my background, about our various companies and ventures, some of our coaching, book, mastermind, all those things that we're doing that are really most important and exciting to me right now. It's all there. So I'm happy to serve, happy to connect with anybody, happy to support anybody in their walk and journey, and using real estate to create wealth and freedom in their life.
Awesome. Well, there you have it, folks. I truly hoped you picked up some actionable advice that you will apply today from Mr. Keir Weimer. Mr. Keir Weimer. Yeah. Make sure to check out the Real Estate Locker Room Show on iTunes, Stitcher, Google Play. We're on Spotify, iHeartRadio, and now on YouTube. When you're there, hit the subscribe button, please, to ensure that other like-minded real estate professionals and entrepreneurs like yourself are able to find us when they're online searching for great content to follow. If you like what the show is all about, leave us a review. That's our online currency these days. On whatever your preferred podcast or viewing platform is. The post-game show notes and report for this show, links to Keir, his website, and his resort will be available on johncarneyonline.com/podcast. This is episode number 83. Feel free to drop your name into our newsletter sign-up form. You know the drill. We rarely send you anything unless we think it's absolutely groundbreaking and earth-shattering. Remember to stay focused on your goals, have fun, and stay in the game. I'm your host, John Carney, and until next week or our next episode, work hard, play hard, and raise the bar. And yep, super stoked that you took the time out of your life to share these great gems with us today, Keir.
Thank you so much, John, and thank you to your audience.
All right, stop recording. So real quick, I want to send you a copy of my book.
Yeah, that'd be awesome, man.
What is if you were receiving